Hi guys, thanks for tuning in to another episode of Nuggets News. We are back with Jeff from Uptrade to talk about all the big flows that they're seeing for their OTC desk. We're going to talk on some gold and silver stuff, their self-managed super offerings, and all that type of thing. So, how was your break, mate?
Yeah, it was really good. Got a few days to rest and relax, and prepare for what's to come in 2026. So
Nice. And yeah, I guess the crypto market's kind of been quiet and chopping around. But so, where do you want to start? What have you been seeing in terms of those main flows? Is it still BTC, ETH, and Sol? Or I think you mentioned XRP is getting a bit of favour. So, what are you seeing?
yeah, we are seeing sustained growth across all the ETFs, despite the market being a bit bearish at the tail end of last year. We have seen a clear outlier among the ETFs though, which is pretty interesting. So yeah, there's some good data coming from that. That's for sure.
Awesome. Well, I know you've got a presentation to share with us. Do you want to get that up and we'll run through it? And yeah, guys, if you
Yes.
haven't been over to uptrade.au, very easy platform to use for all your large orders over 10K with all the issues that people are having on and off ramping with banks and stuff these days. So I've used Uptrade and plenty of you guys probably have already. And yeah, exciting that you guys added the gold and silver tokens a while back. And that's been a wild ride, which we're going to touch on in this presentation as well.
Awesome, fantastic. So yeah, I'll get right into it here. So, yeah, 2026 crypto market outlook. Couple of big things we need to look at now that are more important than ever is things like the Fed balance sheet and the interest rates. There's a close correlation these days between these things and bullish momentum in the crypto space. So as we can see here on the left here on the Fed balance sheet, the contraction of the US Fed balance sheet as officially finished end of last year. So obviously markets marking the end of quantitative tightening. So this sets a stage for the shift towards easing and liquidity starting to flow back into markets. Super important there. So
And I
we're
guess
also seeing.
for people at home, just to really dumb it down, it's just basically money printer, coming back on style, which we love, which tends to be good for all assets, but particularly Bitcoin with that correlation as you mentioned.
Exactly right. And what we're looking to see is for us to go back to those kind of COVID-ish times when the money printers were roaring, interest rates were all-time lows, money is cheap, right? Money circulating, money is cheap equals assets, risk on assets go up. So we can also see the US interest rates there are declining, and they look like they're set to fall further. So that'll be really, really good for crypto for 2026. We also have some stuff around regulatory clarity and institutional adoption, which is all the big moving gears that we're seeing this cycle that we haven't seen previous cycles. So the spot ETF expansion inflows have been really significant across Bitcoin and Ethereum. Um, Obviously huge numbers there, and even the XRP ETF reaching $1.2 billion in AUM. And Solana staking ETFs launching in late 2025, we're seeing rapid growth there. So a couple of decent sort of catalysts. Obviously, the passage of the Genius Act put a big spotlight on stablecoins. Really boring stuff, but the stablecoins are boring stuff for us. But it's really good for the sort of the financial services sector to really start to innovate and take these tools and use them. So obviously, we do have big legislation coming with the Clarity Act and the market structure bill. So yeah, we're looking to see some decent positive sentiment and news and regulations all coming around things like RWA, stablecoin as an infrastructure, and sort of broader adoption by banks and corporates. So
One thing I've been talking about is this is obviously depending on what the final version of the Clarity Act looks like that gets passed, but this is all kind of good for regulation and that side of things. But it's also going to favour the centralisation and the listed assets and ETFs. A lot of these rules look like it might even be a further crackdown on, say, DeFi and
mm,
privacy and that type of thing. So I know as sort of crypto purists, we want a lot of that cypherpunk style stuff, but unfortunately, the reality is that this might just be good for these more mainstream assets. And as you say, BlackRock, a lot of people don't love BlackRock. If they want to tokenize everything with real world assets, it's just the reality that you need to be aware of when you're structuring your portfolio of, because we ultimately, if you're investing, you want to make money. But there are just a couple of things that we've been talking about. So any thoughts on that as well?
Yeah, absolutely. So what we're seeing essentially is crypto going from its, pre-adolescent kind of unregulated cowboy space. It's kind of in its teens at the moment. And when a lot of these acts and regulations and new rules and stuff come in, it actually gives financial services companies like traditional finance a level playing field and a way that they can actually implement this. And obviously a lot of the rules that traditional finance does play by do translate across into crypto regulation. So look, as a whole, it's good for the space. It's good for a maturing asset class. That's what we want to see. But yeah, long gone. In the future will be the days of complete privacy and all this sort of stuff, which is obviously maybe not the initial idea and why the cypherpunks and all these people came on board in crypto to begin with. But that's just what happens when an asset class matures, So it just widens the playing field for everyone, puts in guardrails. So, while it does sound a little bit scary, CBDCs and things like that, if everything's digital at some point, it is inevitable. So yeah, it's just one of those things, I guess. But it'll be good for the space, I believe. Good for growth. Even for on our end, we're seeing regulators coming to the table, clarifying things that were not previously clarified, which sort of helps the whole consumer protection narrative, which is what we're about. So.
Yeah, and I've heard that firsthand from some of my friends that are like money account managers, and a lot of them are in the boring stuff like retirement funds and bonds. And they said that one of the main Australian Bitcoin ETF issuers is about to launch a Bitcoin ETF. So we've already got a couple of like Bitcoin and ETH style products on the Aussie listed stock exchange. But they were saying that once one of these real big, well-known, trusted issuers, then they'll be starting to park whatever 1%, 3% of their clients' wealth, whenever that happens this year or next year. So it's just good to hear that stuff firsthand for number go up, sort of medium to longer term, right?
Yeah, exactly right. And yeah, it's just good for the space in general. And yeah, look, there will be some interesting things. We'll see what happens with CBDCs and all that. But look, the future is here, and it's led by institutions. We firmly believe that this cycle is, what we'd like to say, what we'd like to call it is the institution-led price discovery.
Yeah. All right, moving on. What else have you got for us, man?
Okay, so we're going to take a quick look at the Bitcoin ETF flows. So Bitcoin ETF flows remain reasonably positive. It does have its volatility, just like the asset class itself. But what we're seeing is highlighted sustained institutional demand this month. Okay, so BlackRock's ETF, the fastest growing ETF in history to surpass 70 billion AUM, doing it 5 times faster than the previous record held by gold. If anyone can pull up a chart, just Google, gold. When it got an ETF, you just see it do this. So, over a longer time frame, I'm sure we'll look back and we'll probably see something similar with Bitcoin. But, the ETF opens the gates to everyone to be able to trade it. So we'll have a look at the ETF flow as well. Also, big net inflows on day one, 107 mil on the first day, also led by BlackRock. So multiple consecutive outflow days followed, with net outflows reaching hundreds of millions in the first week, primarily driven by heavy redemptions from Grayscale's previous legacy ETH fund. So obviously when we saw a lot of outflows, we're a bit worried, but it was just the old fund sort of turning over there, so nothing to worry about. So that's those two. The Sol ETF flow. These are two really interesting ones, actually, because we didn't actually think these ones were coming. These are rumors and speculation. Then, lo and behold, they're here now. So, the Sol ETF, obviously positive flows from day one with 16 plus consecutive inflow days shortly after launch. That shows clear demand for the Sol ETF. And obviously it just continued to persist, even through broader market weakness. So, yeah, it's doing really well. But the big outlier that I mentioned here before was the XRP ETF flows. So this has been crazy. As you can see on the chart there, it's been nothing but green inflows except for one day. So this is a telling tale here. So
it obviously helps with the timing. Yeah, with the timing of those launches, with both assets being back 50% or whatever from their highs last year. So good time to launch two ETFs, and it's funny how the big guys always seem to time it right to make the most money off fees for their clients. But either way, as you say, that's crazy. Only one day of outflows on XRP.
Yeah, so it's a bit of sentiment as well. Obviously, XRP has been in the spotlight lately. A lot of it is a very hot narrative now, and a lot of the rumors and things are starting to sort of move into truth, which is pretty exciting for big XRP holders. But yeah, we'll continue to watch the inflows, and it's a bit of a telling tale for us. So. Yeah. All right, so we'll go to one of our newest listed assets. So. Compliments to Ainsley. They have tokenized two big commodities, so gold and silver. Super exciting stuff. We've had a lot of people asking us for this for a while. And, as crypto evolves, like I said, it's nice to be able to offer things that are real and tangible. So this is our us making that come true.
Yeah, and for long-term subscribers, you'll remember when I first went to those Ainsley vaults, 5, 6, 7 years ago, and when they kind of launched these, and they're regularly audited, based in Australia. I've got friends that actually work there and stuff. So this is probably one of the best use cases of blockchain verification with real-world assets. You can organize real redemption. So go in and actually redeem for the actual physical for the tokens you've bought and stuff. So yeah, this is just an awesome asset. And when silver was going crazy, I did that video about, the lines being around the block to buy metal, or you can just buy it at the click of a button. And then, as I said, redeem it later on if you want that physical. So how have you guys seen the demand for these two since you launched?
These have been two of our hottest assets outside of, your majors. We've seen tremendous inflows into these assets. It's for people that want the exposure to the asset, but also, they might redeem it one day. We've got a lot of clients traveling, they're still on breaks, and they go, geez, I need to get into some precious metals, but I can't be there physically to line up for 2 hours and buy it. So this is a way that you can effectively do that and also have a redeemable version of it, because that was a really big thing to us, being able to redeem it for something physical, because, it was the most asked question. It's like, if you're going to list it, can I redeem it? And we're like, well, that's a great question. So we went out and did the due diligence and found a trusted Australian company. And many of you token and silver holders and investors watching, you probably heard that name before, Ainsley. Great company. Can't say anything bad about them at all. And it's been a very, very hot asset. So.
Do you know off the top of your head what that redemption time frame is? Is it like giving them 48 hours notice or a week and then coming in to pick up your physical? Or it's all right if you don't know, but I was
Yeah. I think it just depends on supply and demand, so I'm not exactly sure. But yeah, it definitely is redeemable.
That's right.
So
I'll look that up afterwards, because it is. Yeah, I've been getting that question a lot too, and I think I read 48 hours, but I'll double check that. But yeah.
Well, 48 hours is reasonable. I'm sure they'd lock in a price for you and away you'd go. So yeah.
Cool. What else have you got for us, mate, today?
Yeah, that's it for the presentation.
Cool, I'll get out of that for you.
No worries.
What about super funds? I know we did that video last year, and I mean, the backdrop of super funds going bust in Australia, and the wobbles in like real estate products in the retirement, where there's just not the liquidity, and we've seen people pause redemption. So more and more people want to manage their own super. So how have you guys seen that popularity wise, and what assets are people getting into and all that type of thing?
Yeah, that's a great question. So we're seeing a massive trend around people sort of our age sort of cohort, sort of 30 to 45, I'd say, are the biggest trend of people who are, converting their traditional super funds over into SMSFs. And, it comes with the realization that you're not really beating inflation by much, or you're not beating it at all from having a traditional super fund. And people want more control over their assets. They want more control over their retirement and more say in where it's invested. So yeah, it's been one of the biggest trends of last year of people setting up, because we mostly have corporate accounts, we have businesses that sign up. Very, very rarely do individuals sign up with Uptrade, right? But the biggest entity setup trend that we've found is definitely SMSFs, and people predominantly buying low risk assets like Bitcoin and maybe a bit of Ethereum. But yeah, it's been huge, and I firmly believe it's probably no financial advice, of course, but it's a good way to control what assets you invest in. But also, if you expand the Bitcoin chart, it's returned 160, 170% year on year since its conception, if you want to calculate it out. So look, our parents, and they had property, they had all sorts of other things, but we have crypto, so it's good to see more people who aren't crypto native actually look at Bitcoin as a viable investment vehicle for their SMSF. It's incredible stuff.
Yeah. And if people do want to get all that set up, you can just head over to the website, guys. All the links down below, and set up a consult with Jeff and the team. But anything else that you've been noticing, mate? Geopolitics, investing wise, uptrade wise, before we let you go?
Yeah, look, I guess my personal sentiment on the market, last year we were cautiously optimistic about an actual bull cycle, and we are very optimistic this year, just because of the fact that, like I said, we have the quantitative easing, interest rates are coming down. There's a lot more things working in crypto's favor than not. I believe that I might get shot for saying this, but I believe the 4-year cycle is broken. Because we've been able to sustain a price above sort of 90 outside of that 4-year gap. So, like I mentioned, we're looking at a sort of institution-led price discovery now, where all this new capital's coming in, and then retail at some point will follow as well when the market conditions are more favorable. And then we're gonna go hell for leather, I think. And it's funny because a lot of people sort of are pretty bearish, and that's usually the time that things turn around very quickly. And previous cycles, the last cycle eclipsed the previous cycle, and that the previous cycle from that, so they've always been larger cycles ever since. And the biggest differentiator we have now is we have more rules, more regulations, more guardrails. We have one of the largest economies in the world that are pro crypto. They have a pro crypto president, whether you like him or not. And look, it's here, and it's many of the assets we never thought would get ETFs have ETFs now. So it's going to be very interesting to see how this year plays out. But we are very bullish.
Fantastic. Well, guys, as I said, for all those large orders, on-ramping or off-ramping to get around banking issues, and you can set your orders, and it's much like an exchange now, the way you guys have set up the platform. So I love it. And thanks so much for coming on today, mate.
Thanks for having me on, Alex.
Cheers, guys.